Yo, yo, good morning, StockTwits crew. How's everybody doing this morning? Welcome back to another episode. Market is pretty quiet at the
Oh
moment,
shoot,
going
Jordan,
pretty
are you rugging already?
sideways. What's that? Am I rugging?
Oh, you're rugging a bit for me, but you're
No.
good.
Okay. All right, we're good.
No, you're good now.
Either way, yeah, market's moving pretty sideways, pretty quiet since last night after the close, but should be fun. We got a fun show planned for y'all, so gonna be a good time. Shy, how we feeling this morning?
I'm feeling great, mainly because I love discounts on my favorite stocks, and it feels like today's gonna be one of those kind of days for that discount where we had a pretty big reaction yesterday on the DeepSeek news. At one point, the QQQ was down 5% pre-market. I think we settled at I don't know where we ended up, like maybe down 2%, 2.5, 3. I thought there would be somewhat of a relief rally this morning of, I don't know, at least filling half of that gap. We're not getting any of that right now. And that's telling me there might be some more lows coming forward until tomorrow's earnings report. And it's kind of makes sense because we have Meta and Microsoft reporting their earnings, and even even Tesla's commentary on their compute requirements. Like all three of those commentary on the CC will be huge to figure out what kind of narrative is going to happen right now from in a semiconductor chain, because right now DeepSeek poked a real big hole in the narrative that's been driving that specific industry for 2 years. And if the big tech capex has any signs of a weakness or lack of confirming that capex spend is going to continue, things could be a little troubling. So I wouldn't. I think a lot of maybe that's why we're not seeing that pre-market action, because maybe people just don't want to overexpose themselves ahead of a major catalyst like that tomorrow.
Yeah, I'm with you. Well, let's get into the daily recap. What happened yesterday? Here's the heat map. Microsoft, your big tech stuff looking pretty red. Apple held up really well though. Obviously, them not being as big of a part in AI as some of these other companies, they just held up extremely well yesterday with all that downside. So love to see that. I definitely wish I held some of my calls from last week, seeing that we got that gap fill, but I was happy to take, the 50% retracement of that gap. So it's a good trade, but definitely left some money on the table going into this week. But we got earnings coming up. I think that's what tomorrow as well, so or Thursday. So happy to be out of that position. But Nvidia, just a rough day for Nvidia. Obviously down almost 17%. AVGO down almost 18%. Just really rough in those areas, and it makes sense, right, with everything that happened. But as we talked about yesterday, I think longer term, this is definitely a bullish thing, and not. I think this is just like a big short term headway reaction type of thing that we're seeing, and we see that with big news all the time, right? And it ends up being being just okay in all the end. So I don't know, Shy, how are we feeling about this? Obviously, that was a nasty day for Nvidia and the majority of the big tech names. So curious on how you were kind of approaching yesterday. I know you had some puts, so that did well.
That did do well. I did sell those puts for sure yesterday. Yeah, I think yesterday was a big opportunity. Again, like 2025 is going to be a stock picking year for the market. Like being, you have to be specific of what exposure you want. It's not going to be easy money like it's been past 2 years where you essentially can buy anything. It's probably up. Um, I do think that everything yesterday that was AI related had a massive sell off pre market just because of the noise that DeepSeek provided, and I think anything in the semiconductor chain got brutalized, and software also got penalized. But then, like I called out pre-market yesterday, like that this is a massive tailwind for software. I think what DeepSeek's model provided, specifically around the efficiency gains from DeepSeek's model, is going to be transformative on software companies with a consumption model, MongoDB, Snowflake, for example. So I think also that's going to be a massive surge in demand for like the stage two AI winners, like the Palantirs, um, ServiceNow, etc. So I think that's where you kind of want that exposure to be in. I think, like you said, Apple yesterday benefited substantially from their lack of innovation the past couple of years. Do what you want with that information. Like, fine, get that 3% gain from them being sitting on their hands and not capitalizing on the AI revolution. But okay, yeah, that's what happened yesterday for Apple. But regardless, like, I do think there's pockets of semiconductor names that won't be penalized from DeepSeek. Like it's not going to be as much of a risk associated with their products. And I made a post today this morning calling out which names will thrive still and which names might get disrupted. And it's kind of crazy how the disruption list is expanding, but it's not end all be all. Everything in the semiconductor chain is going to get penalized. But yesterday, if you saw the price action, like Astera Labs was down 30%, Broadcom was down 20%, Marvell was down 20%. These are three names that are going to benefit from the infra. They're going to benefit still in the post DeepSeek playbook reveal world. So I think you have to be very picky and choose and specific on which names you want exposure in 2025, and you have to test your thesis consistently.
Yeah, and what blew investor socks off was the claim that it performs on par with OpenAI's O1 reasoning model, but at a fraction of the cost per use. So obviously seeing that yesterday, I mean, things are, you're going to see some crazy reaction off that, right? It's no surprise. And that's something we can play, right, on the short term and use as a potential buying opportunity, right? I wasn't super quick to just like buy this dip in any of my long-term accounts yesterday, but obviously like perking my ears up, right? I'm getting ready, right? I got my shopping list ready, and we're waiting for those prices to come into play, right? So I love to see it, man.
I will say, like, take this quote, and you'll find it in 6 months. Inference demand will outpace the risk of the training headwinds from DeepSeek's playbook. Like, there's going to be the headwinds and training data is absolutely real, but the inference demand is going to be way higher than what the risk is associated. So that's why if we get more pains today, like I'd do some trades. Like Nvidia was a really great trade at the 200-day moving average at 118. It bounced right off there. So if we retest that level, I might do some calls, especially to capitalize on tomorrow's earnings.
Yeah, good stuff. Today's wreckage and retail's reaction. So looking at Nvidia again, we've been talking about that 200-day for a while on the show. I know Shay has mentioned it plenty, so something to watch there, right? This is really the big spot. Now, I will say, using moving averages or exponential moving averages, whatever you're using, I mean, it's a very common tool, right? Everybody and their mother is using this, right? So is it worth noting, and is it something to ignore? Like, no, I wouldn't ignore it. I would definitely note this and be aware that we're around the 200-day, right? But I would not sheerly be buying just because of this. And simply because, again, everybody and their mother's watching this EMA. It would be a shock to me to watch it come down perfectly, us pin price right at that level and just bounce. It's too easy, right? It does happen for sure, but more rare. It's very rare that happens, right? I mean, how many times do you guys go and see? I mean, intraday especially, like things move past their moving averages and then reclaim them, right? It's never a perfect bounce for the most part. So that's where just using it as an extra point of confluence, right? It's okay to use the 200 EMA or the 200 moving average, whatever this is, the 200 day. But just make sure you have other points of confluence. Don't put all your chips just on a freaking moving average, please, because it's not why the market's moving. It's not why Nvidia will bounce, right? It might be an added point of confluence. But just, got to be careful with these moving averages because you got to remember that everybody's using it. And if everybody's using it, well, can I really expect it to just trade exactly how I want and, pin price perfectly at that level? It does happen sometimes again, but something I just can't expect that, right? I need more. I need other points of confluence. So just my thoughts there. But obviously 200-day is huge, right, Shay?
Yeah, I mean, I think I love using stage analysis on charts. And if you guys don't know what that is, essentially stage 1 is like the basis forming. Stage 2, it advances. Stage 3, there's distribution or top. And then stage 4, decline. So stage 2 is when the money is made. Stage 4, when it declines, that stage 4 gets launched when the 200-day moving average is lost. That's why this metric and everyone and their mother uses it, because that stage analysis broke down. It is widely used as like the Bible for any kind of trading. So once the stage 4 gets launched, I know a lot of people who sell their trading positions until that 200-day moving average is recovered again, because that stage 4 breakdown is where you lose so much money. Just look at all the charts in 2022 when the bubble bursted. If you just sold it when the 200-day moving average got lost and held that cash, you could have had some ridiculous buying power, buying opportunities once that stage one base formed and was entering stage two again. So like, I know I'm a long-term investor, so I don't really use it as much. It's just like something I monitor, but it is a massive level. And Nvidia kind of being at stage two for 2 years and causing a 1,300% gain, that's a stage two. That's where cash is being made. But you can see the stage three, the 6 months of them forming, that's pure distribution. That's stage three. And it look like if we have a dip today and it goes below 118 and tomorrow isn't the catalyst that's going to save it, this is a classic stage four breakdown. And it doesn't matter what the fundamentals might be. If there's too much noise around the stock, it's going to break down substantially because it's now a trade to the downside. And now the narrative has to be bullish enough to buck that trade to the downside. So that's why it's a massive level.
Yeah. 100%. Or as for the StockTwits community, 72% of the 6,700 investors polled are using this weakness to buy Nvidia over its competitors. As you can see from my vote, I voted for something else. Go to the comments. Yeah, very cool. DeepSeek Slam semi-stocks. Which name are you buying the dip in? Most people on StockTwits are buying Nvidia, so I love to see that's the name that was down pretty much the most, and people are going to pick it up, right? And again, I mean, now, was I like super quick to jump on this dip? No, personally. But, you know, if you've been waiting and you've been wanting to be an investor in Nvidia and you've been waiting for a dip, I mean, if I was sitting on the sidelines waiting for a spot, this is a great kind of starting point, I think, for me to like, hey, we're actually getting a huge decline. Maybe I can throw a few bucks in here and maybe start to open myself up to a position here, right? So, again, like these dips bring buying opportunities, right? I know it seems like one day overnight things change and oh my gosh, the market's going to go down and it's all red and everything just seems so bearish and against the market being bullish, and then we get back to, you know, last year, right? And it's just a cycle. It happens over and over and over, right? And so that's why when these bear markets do come in, and we're not even in one yet, right? But I'm saying, like, you know, if we were to get to the point where we're really selling off, it's a good thing, guys. We want that. It sucks in the time, in the moment, because you're thinking about my long term and all this, but in the long term grand scheme of things, it's so much better because you're just getting better prices for companies that you love. And again, like I was explaining this the other day, but that's why I have 3 different accounts, right? I have my long term account, I have all my futures accounts, I have my swing trading options account. And so when days like yesterday happen, I'm not tripping. I don't care. I'm not worried about my long-term. I didn't even look at it yesterday. I literally didn't even open my long-term account because it's irrelevant. It doesn't matter what's happening. I know I'm invested in the stocks that I want to be. I'm waiting for dips on stocks that I love, and I'm going to take money I make from the intraday and swing trading and implement those into my long-term investments when the time's right, and just keep doing that cycle over and over, right? So it's very easy to do that when you have multiple accounts. So, you know what I mean? If you're a very active trader, I highly recommend kind of doing that and splitting yourself up a little bit because it can help keep your mindset kind of at bay. But yeah, definitely love seeing people buying the dip on Nvidia. Many of you noticed our brand new StockTwits look last week. However, we need your help with the final piece of this rebrand, our StockTwits crypto logo. You guys should go vote on the polls for which image you guys like the best for the StockTwits crypto. That'll be on the StockTwits platform or on X, on any of the polls there. So you guys should go and put your vote in there, and we'll see what we get for that. SMH, the semiconductors breaking down hard with Nvidia, and you know all the semis just getting some nastiness yesterday. Everything's breaking down and not looking too good, but I wouldn't be 100% convinced, at least just looking at SMH. We are getting a bit of a break of this channel we've been in, right? This kind of consolidation period. So that is nasty. You are seeing rising volume on that move. So I'm looking for that next daily low that comes into play that we're almost around right above that 228 there. So I'd be looking for that. But at the same time, I'd like to see a bit of a retest of the area we just broke, and then you can obviously kind of see the price action there and say, hey, is this just a retest, or are bulls kind of stepping in, or are we're trying to reclaim this level, right? Given the way that candle looks, I wouldn't expect a reclaim, to be honest, but you never know, right? Just depends on the price action you get when you get back to those back test areas. So something to watch there, especially, if SMH is continuing to break down, that's just showing weakness in the entire semiconductor sector. And that's something you want to be aware of if you're heavily invested there or if you're trying to trade that, right? So be aware for sure. Any thoughts on SMH, Shy?
I'm bearish until it recovers 245. I think
Makes
this is
sense.
it's looking like a clear stage 4 breakdown, like I mentioned before, and it's that level, the 200-day moving average with the 40-week SMA. It's kind of ever since their rally in January 2023, it's bounced at that level every time I retested it. In October 2023, retest bounced. Yen carry trade crisis bounced. September sellout bounce, and then it's been consolidating up there the past 4 months, but it's been holding that level, like teetering above it, just above it, and now it's sliced through. And even when we try recovering, it's a resistance now. So this support level can easily flip to a resistant level, and that's where more downside can occur. So like I am watching 245, huge level.
Yes, sir. Good stuff. What do we got next? AI faces biggest drop yet. So, this is yeah. Is this really the biggest drop since December 30th,
I think
2022? I guess so. What's up, Shaq?
I mean for semis for sure,
Yeah.
100%. And I do think for like the VSTs, the VRTs, I think the energy demand is kind of dead in the near term. If this DeepSeek playbook is real, I think it's the reason I say it's dead is because that capex requirement for all these plants to fulfill the alternative energy sources for these data centers, I think that's going to kind of be on pause a bit until they figure out the new AI world post DeepSeek. It's not going to be a pure guarantee that we need computational demands going to exceed what our infrastructure currently right now. Like if there's cheaper, quicker ways than there were known a couple weeks ago, that is going to somewhat be worrisome on some energy assumptions that we had. And that's kind of part of the course. Again, like when we're so early in a growth theme like AI, nobody really knows what it's going to be yet at all. Nobody knows. There's going to be some holes being poked. There's going to be some bottlenecks exposed. Like we don't know. We're all figuring out at the same time while more information comes to light. But energy does look like an area you don't want exposure in right now with all this DeepSeek noise.
I feel like nobody cares right now either. You know
Oh,
what I mean? Like,
I'm
it's just
also
like,
stoked because like I love the alternative energy angle for AI, but like I never felt the urgency of it. I was like, I don't know,
yeah,
like maybe if we get the pullback, like we had Oklo down 30% yesterday. We had VST, all these names were down 20+% yesterday. If this is the beginning of a gap fill from all the pull forward revenue assumptions that were going to be made, and we fill that gap, then maybe that is a great place to start initiating a position. Because I do think
hmm
for AI to reach its full potential, we do need alternative energy sources. Like we do need it. I just think the timeline maybe got extended from what happened from DeepSeek, and that causes a re-rating for the whole bucket, and that's when you kind of capitalize. I'm not saying the
yeah.
thesis is dead. I just think the whole thing's getting re-rated a bit with the timeline being pushed out.
No, that makes sense. I'm interested to see how that plays out now too. Keep it on watch. Tesla under pressure. We've really watched Tesla just kind of go sideways after making these impulsive highs, which makes sense, right? It's healthy for the stock, in my opinion. Definitely getting some downside with Nasdaq and everything over yesterday, though. So, if Nasdaq is still drilling, I definitely expect downside on Tesla. But regardless, this consolidation is healthy to me. We do have a bit of we have a bit of a break of structure on the daily, so structure is kind of bearish at the moment. But obviously, you on a higher time frame, looking at this from a bigger scale, I'm still heavily bullish, obviously. So little bearish structure kind of starting on the daily here, but nothing to worry about in my opinion. It's just like for short term swing trades, right? There's definitely been some shorts to play. I'm waiting for spots to get long personally on swing trades. The time is not now for me, especially the way we're kind of just rolling over. You see, really not getting a big bullish reaction off that moving average that we just tested. So I'd like to see us maybe come into some of those previous range lows, maybe even that gap fill. Would love to see it. It's not bad to me. I know everybody would probably be freaking out because, oh my gosh, Tesla's under $300 now, but I wouldn't care. I would love it. I think that would be great. Fundamentally, or like technically for the chart, and yeah, if we can see some bounces off those areas. We also have just all those bundled EMAs down there. I don't know exactly what moving averages those are, but coming right into those lows and that kind of gap area that I'm looking at. So I wouldn't be surprised if we do end up selling, coming into that 300 area, getting a back test of that. That's something I would look to capitalize on. But also can't really count Tesla out, in my opinion. This is one where, it can hold up while the market's taking a bit of a crap, and then turn it on really quickly. And you don't wanna be stepping in front of a freight train. So definitely be careful there. But I think there's plenty of opportunities for trading options on Tesla pretty much every day. So any thoughts, Shai?
Yeah. Yeah. So on Tesla, I mean, they're reporting their earnings tomorrow. This move that they had since November is purely based on a narrative change, which essentially is the riskiest of gap ups because there's no fundamental change that's going to happen immediately. So like when they report their earnings tomorrow, I don't expect much. It's again, I'm investing in Tesla on them solving real world AI applications through autonomy. Nothing tomorrow is going to reveal much about that vision for Tesla for me. So I think tomorrow's going to be a nothing burger. I could see it maybe fading a bit because it nearly doubled in a matter of months. But also, like, it's been consolidating since that gap up.
Yeah, it's
I'm
hard. That's showing strength, right? It's like
100%.
it's hard to
But
see. Yeah.
also, I've been saying this, like the crown jewels of this AI era is not going to be the infrastructure or semiconductors. It's going to be the applications. They're going to be the accelerators. And if you want exposure to the accelerators of this or the crown jewel of this era that we're just beginning, I don't understand how you can have a bucket of stocks and not include a Palantir or Tesla. So I think it's going to be like high floor in this name. I think it got re-rated from an EV company to an autonomous company for real world AI, and now they have to like next year probably they have to start like actually seeing some flow of FSD revenue or autonomy fundamentals being reflected into their financials for them to hold this price. But when they do, like I do think it's going to be explosive. It's going to be a game changer for their margin profile and the DCF models. I'm not really adding because it's a 10% position. I got overweight at 180. If I was to add, it'd probably be closer to that 200-day moving average that's around 270 to 300. And there's a ways to go from it at $400 right now.
Yeah, I'm not adding. I'm way too exposed to Tesla right now, and I'm actively trying to add to other names to bring down my exposure a little bit. So we got a little carried away over the past year. So no, but absolutely love Tesla. Excited for the future for sure. Moving on, we got AT&T breaking higher. They had earnings yesterday with SoFi, so they reported. Looks like it did well. I didn't actually look at the numbers, so I don't know for sure. Let's take a look real quick. Yeah, double beat revenue 1.12% and beat EPS by 5.88%. So solid there, getting a nice move, breaking out of those highs. I mean, look at the bullish structure. What do you see here? You see higher highs, higher lows. When we are quiet, we're consolidating sideways. We're not losing a ton of, what we've done, like all the price action to the upside. You're not losing any of that really aggressively and fast to the downside on any dips that do come. It's pretty constructive and sideways, which can be really boring on these on these pullbacks, right, or in this consolidation, especially on a name like AT&T that very much only goes sideways. But no, love to see the breakout. I think, playing short-term momentum on that is totally fine. Similar to, I'll play short-term momentum on Mickey D's when they got earnings, or Caterpillar, right? Things like that. Like that's when I'm playing that for the morning or maybe like 2 days, and then I'm gone, and maybe next earnings we'll play it again. But other than that, not names I really touch much. Any thoughts, Shy?
Yeah, I mean, I think AT&T is like going back to what I just said, like on top of it to add more color, I think AT&T is a perfect example of what I was referencing before, where the infrastructure of any kind of revolution, technical revolution, is where all the eyeballs go initially. And it happened in the dot-com era. All the focus was on the firms that are laying the groundwork for connectivity, the structural arteries of the internet, like the AT&Ts, Verizon, IBM, Cisco's. It was really essential work, but really it wasn't the crown jewel of that era. You see AT&T, it hit $45 in 2020 when the dot-com era was just getting launched. It's at 24 right now, 25 years later. That wasn't the crown jewel of that era, and it was mispriced, and a lot of the intention was flawed because of that. So the reason I want to add that color is like look at AT&T as a classic example on why it's really important to reposition yourself at the stage where in AI. I'm not saying sell Nvidia, sell TSMC, sell ASML, but I'm saying there's a lot of equipment manufacturing companies who maybe are going to be vulnerable if DeepSeek's playbook is a reality. And why own that headache when you can have the opportunity to own the crown jewels of this era, which is going to be the software applications, the accelerators. So I want to add that color in
Yeah,
for AT&T. That's all I
100%.
can really do because AT&T is a really dead company, in my
Yeah.
opinion. They'll never recover from the balance sheet. The cash and debt is disgusting, and poor corporate governance on that those deals they made in the past for the cable, which cable is dead, linear TV is dead, CTV
Mm-hmm.
is the future, and that's gonna cause the death of them
Yeah.
because of their debts. Yeah.
I'm with you, man. Yeah. I mean, the whole 5 years that I've been around the stock market, I think I've moved it just as much as we watch Spy move in one day. So, um, no, no, jokes. But tree sees volume spike on here. So, this is starting to get some momentum, trying to break out of this bit of a downtrend consolidation we've been in. I don't know. For the most part, I feel like this has been in um, uh, I want to say uptrend, but it looks a little more sideways than an uptrend, if you ask me. This basically just looks like a barcode sideways. So, but trying to get some momentum on the short term here off that 35.50. Trying to get some higher lows and higher highs going in this market. So maybe you get a push towards that. Where are we at right now? We're basically at 50. So maybe you get a push towards that $60, that previous resistance that's sitting up there. I can't think and expect that this is gonna break out, but maybe you go and are able to touch some of those previous resistance levels. But something I'd watch out for, even though you're breaking out of that trend line, is there's still possibility for lower highs even with that trend line break, right? It's just you're not gonna now there's not a possibility of that specific lower high formation continuing, right? But we could easily pop up. The structure is bullish till $60. We hit $60, hit massive resistance. They sweep liquidity, and we end up distributing lower, right? So, I'd watch out for that. It's just very sideways here, very quiet. So I'd play, if there's momentum when it's there, play the momentum. But if it's not there, this thing's probably gonna stay fairly quiet, in my opinion. Any thoughts, Shy?
I think rates staying higher for longer is after like the Fed cut rates in September. It's caught a lot of like these kind of investors and also companies like off guard. They anticipated a lot like a that did not occur. So it's kind of delayed the reaction. You're seeing that in the stock price a bit right now as well, where ever since the Fed cut rates, it kind of went to $60, and all of a sudden the 10-year yield was telling you something completely opposite of what we all assumed. It hasn't really recovered since then. The 10-year yield has gone from 4.7 to 4.5, and guess what happened to that stock? This is a 10-year yield stock. Like like all these stocks are a bucket for that. So watch the 10-year yield. If it's going lower, Lending Tree will catch a bid.
Yeah, I like it. We got the market opening in about 1 minute here. We got our man Austin popping on. He's going to join us and just join us for the open. I think we're going to talk a little bit about that DeepSeek AI stuff, just get his thoughts on it. But yeah, let's get him in here if he's ready to go. But we'll see if this market wants to do it open as well. Pretty quiet to start the morning here. Just NQ going sideways from the closing price yesterday. So we'll see what happens with that. Austin, how you doing, my man?
Gentlemen, I'm wearing my green shirt today
Let's go.
because I want to see a green day in the markets.
Let's go, baby. I'm
I
with
hope
you.
you have
I
I hope
would
you
love
have a
to see
red
it.
shirt next to you.
Okay, okay.
Just in case, just in case.
I think it might go red.
I'll wear
We'll see
black.
right
I'll wear
now.
black for a funeral. How's that sound?
That's better.
Oh my gosh.
Guys,
Well,
what the heck happened yesterday?
bro, this DeepSeek AI stuff is crazy. There's the bell. Yeah, this DeepSeek AI stuff is just nuts, man. I mean, Nvidia down what 17% almost yesterday. Obviously, kind of a big short-term headway. I think it's a short-term headway though. I think long-term, we're gonna be all chilling. But I'm just curious on your thoughts of how you were kind of managing yesterday. What did it look like for Austin's morning when we woke up and saw the market doing what it was doing? I'm curious on how you approached everything.
To be quite honest with you guys, my portfolio, I looked at it, call it maybe an hour or 2 hours after the open, and I looked at it yesterday, and the Nasdaq was down like 2% or something, and the S&P was down like 1.5, or I mean, it was a material move down for the indices. And I look at my portfolio only down 40 basis points, and I'm like, huh, what happened here? And so I look in and I see Berkshire Hathaway's in the green. I see Kroger is in the green. I see Salesforce is in the green. MasterCard, Visa, all these dividend growth stocks that we all know and love, they're all still in the green. So I'm thinking, this seems like it's very much a AI related. It's actually so funny. I saw a meme on X about how this was so pertinent just to AI that Apple stock yesterday didn't even get touched. Man.
Literally,
Oh,
it
Because
didn't.
Apple, I
It
mean,
didn't
it's
move
not
down
AI
at
for them,
all.
it's Apple Intelligence, right?
Crazy. I couldn't believe it. I was like, Apple's not moving down at all with this whole
was
move.
so
I mean,
funny.
Nasdaq dropping like that is you gotta expect the biggest names of SPY to be doing the same thing, right? I checked Microsoft tanking. I check Apple and it's just holding price perfectly, actually starting to rip. And I was just like, wow, that's what this means, right? When you get this kind of AI news. But along with that, right, I also think longer term that might not be so good for Apple if this all blows over and this ends up being just fine, right? I'm curious on your thoughts there as well.
Yeah, I feel
Market's
like,
red right now, so it's fading. Just want to call that out.
Oh, go ahead. What'd you say?
No,
You
I
said
was just saying
market's
the
red.
market's fading right now. But yeah, yeah.
Mm.
Continue your thoughts. Sorry, I just want to make that commentary.
Yeah, it sure is. Oh my goodness. Well, let's talk about that, right? Because I mean, last time I was on, I'd mentioned that I think a major theme for 2025 is volatility. We saw the VIX yesterday spike by like 40 something percent. The Qs fell by 3% or so. And I talked about the NUSI ETF, NUSI, the NEOS NASDAQ Hedged High Income ETF, which is essentially a covered call ETF on the NASDAQ 100 that uses some of the premium they generate to purchase put option contracts against the NASDAQ, right? So if the NASDAQ does fall, these put option contracts theoretically kind of offset some of that volatility. So it's cool to see that I mean, volatility in general isn't fun, but it's cool to know that we have a game plan to endure some of this volatility, assuming you're someone like me who wants consistent exposure to the Nasdaq. So the NEOS Nasdaq Hedged High Income ETF NUSI, I think was just a really cool example yesterday of it working. Right, the Qs were down 3% or so. NUSI fell just shy of 2%. Right, so call it a 1.5% delta there, and that's not including the call it 9 or 10% annual distribution yield you get with that ETF. So highly recommend people to keep an eye on that one as well. But I thought, just in the light of all the craziness we've seen, it'd be really fun to share some of our favorite not so sexy names. Flying cars and humanoid robots and AI. I feel like that's the narrative right now, and a lot of people are excited about those things. But I think it'd be really fun to dive deep into a couple names here that are the complete opposite of that. And when I say complete opposite, I really mean the complete opposite. So
Well, what
I'm,
do you
I'm
got?
excited
I'm
to dig into
excited.
that.
Yeah.
Are these grandpa and grandma picks? Is that
These
that
are
what
some
you're trying to tell me?
grandpa grandma picks,
I
man. This
love
is
it.
something you'll see in your dad's portfolio.
Let's go. That's awesome. Good
But
stuff.
before we jump into that, Shy, haven't heard from you, man. What was your take yesterday? What's your perspective on what's going on today? Looking forward for the
Yeah.
earnings. Obviously, we have Meta and Microsoft coming up tomorrow. Tesla, I think, is Thursday. A lot of things to consider here. So, what's your educated perspective on what happened?
I was a fat kid in a candy store yesterday. I thought I my 2025 outlook was kind of spot on so far. I was like, there's going to be a repositioning towards software due to an agentic AI world that we're about to start entering, and I think that that's where the next hot pocket's going to be. And this news from DeepSeek, I think, accelerated that because let's just say all the way I won't get to the jargon of what happened over the weekend, but it just AI tools became cheaper. Let's just say that AI tools became cheaper. So now creating these AI products are going to amplify 5x, 10x, 100x. Who will benefit substantially from that? It's going to be the software applications, specifically with consumption models, because explode at a rapid pace because of the democratization of AI tools. So when I saw Snowflake, MongoDB, Cloudflare, all these names down 6% pre-market because anything AI related from the DeepSeek news over the weekend was selling off, I was like, this is absurd. The reference I made yesterday, the metaphor was like, gas prices just tanked. Are you telling me that more people are going to sell their cars now because gas prices are cheaper? No. Going from point A to point B got substantially cheaper because fuel got cheaper. There's gonna be more cars now on the road. It's gonna be more affordable to get from point A to point B. That's the same thing that's happening right now on hardware stocks and software stocks. So that's a massive buying opportunity, and we saw it yesterday. Snowflake, all those software names with consumption models went up 10%. Seeing Snowflake's up 2%, MongoDB's up 2%, Cloudflare up 1%. Q's just faded and it's down 0.2%. The repositioning is occurring right now from stage 1 to stage 2 of AI, and the reference or the rhetoric I've been saying is the crown jewel of this AI era is going to be software applications. Just like how the crown jewels of the dot-com era was the applications that were built on the structural arteries of the internet. Google, Amazon. Same thing's going to happen for AI for this stage. So you want the Palantir, you want the Tesla, you want the Snowflakes, etc. I think DeepSeek accelerated that transition, and it's going to be a race now to get exposure to these names before they report those home run firework type of earnings. But I just went off on a tangent, so I want to hear what you think
no, I
about
love
that,
this.
Austin.
Wait. So before I jump in with a couple of my like old man picks here, I'm curious, like, what are your top three, top five? Is it MongoDB, Snowflake, Palantir? Like, what are some of these big names that you think are going to see, call it over the next 6, 9, 12 months, a massive shift in how they're able to just deliver earnings to the bottom line?
Yeah, so I think the two names have cemented themselves already in stage 2 AI winners. Palantir through AIP for enterprise AI, Tesla through real world AI applications through autonomy. Those two have cemented themselves in stage 2 AI present, like prestige, and you saw that reflect in their stock price past 6 or 12 months. There's going to be a handful of names that are going to join them, in my opinion. First one is Snowflake. Snowflake is going to go through a massive re-rating, similar to what Palantir went through from 23 and 24, where Palantir was being priced in as the black box consulting company for the government to now the enterprise AI leader. That caused the stock to 10x when their fundamentals improved, but it didn't improve enough from a 10x improvement. It was purely a narrative-driven margin premium expansion that happened on the stock. Same thing's going to go from Snowflake, where their narrative was AI is going to cannibalize them as a data warehouse company to, whoa, they're going to be the data platform for enterprise AI when 40% of the Fortune 100 companies store their data into Snowflake already. It takes years to migrate out of. They're not going to do that because there's no that drastically better alternative solution. Like Databricks is a great alternative solution, but it's not drastically better to pause your initiatives for 2 years to get your data out of Snowflake. You just don't do that. So Snowflake, with the consumption model and that data advantage, merge that together. They're creating a ton of AI products in 24 as an investment year that's going to bear fruit this year. You're going to see that first name. Cloudflare is the next name that's going to be, I think you're already seeing like the terminology for this. They're going to be the AWS of this movement, where they're essentially they handle 20% of the global traffic already. I do think they're just going to be able to, their workers platform is going to launch in the post-agentic AI world, similar fashion that AWS did for cloud computing. And they're going to be the internet control center, essentially, of the agentic AI world. MongoDB is my dark horse. They theoretically in their NoSQL database should capitalize on this environment we're about to enter. However, fundamentals don't look the best right now. It's very cyclical. They're very exposed to transactions due to application exposure in their database, especially for SMBs. But theoretically, like when things are going great, especially when business spending is ramping up for AI, this takes off because they're very exposed to the cyclical risk of business spending. So this is my dark horse candidate of like, if they can produce 25 to 30% CAGR on the top line, I think, which I think they can in this environment we're about to enter. And right now the market, the street's pricing them at 12 to 15% top line growth. That's a massive re-rating, and especially as you're aware, like databases are like where you want to be in AI. You see it with Oracle right now. The NoSQL database is a niche within database, but it's you print cash in the database niche within that ecosystem. So I think MongoDB, if things are going correct, could be a $500 stock. And my last pick, before because I'm taking up way too much time.
No, you're good.
I'm learning,
compute.
man. I love this. Keep going.
I think compute's going to take off. So like, I'm not going to say Amazon because everyone knows AWS is the king of compute. DOCN. DigitalOcean is a pure cloud computing play for SMBs. My thesis for SMBs are in the agentic AI world, SMBs are going to explode. Austin can create an AI agent. He can have 20 companies overnight. That's an SMB. He doesn't need any departments anymore to run it. Jordan, same with me and myself. Like, they're going to explode, and they're going to need affordable compute to essentially fulfill those AI products. And what DeepSeek revealed over the weekend was the democratization of AI tools is kind of going to be the future. What is a democratization of cloud computing? It's DigitalOcean. It's the most affordable cloud computing solution that's tailored for developers and SMBs. But I think developers and SMBs are going to explode with AI tools becoming drastically cheaper if it's 93% cheaper. So I think that's why, like, I think cloud computing for SMBs are going to be a really great place to be, and that's a bread and butter for DigitalOcean. So like, that's another example where like, I think they're supposed to grow 15% this year. Like, if my thesis is right on this company, I think the fundamental profile flips upside down. It's almost going to be like 25 to 30%, especially when democratization of AI is going to become way accelerated this year. And I think the market's not pricing in that much right now. So those are my four names, but
Dude, I love
we'll
that.
see if they
No,
come to
that was
light.
a wonderful, wonderful breakdown. Thank you so much for sharing those. I definitely took notes, and I'm excited to dig more into them. Before I now share a couple of my picks here of these grandpa not so sexy ideas, let's reflect upon, last time I was here, we talked about Oscar Health stock, right? Oscar Health, I think at the time it was trading around, call it, trying to see 1420, 1450, somewhere in that range. Now it's at 1660. Stock is up since January 13th through today 17%. So if you bought it last time I was here, thumbs up. I'm still super bullish on this name, Oscar Health. I continue to believe we'll see $25, $35, $45 per share Oscar Health in the coming 12, 18, 24 months. I think they are, again, kind of in this bubble around the Trump administration with healthcare stocks. They're on the bleeding edge of value-based healthcare. It's the good healthcare type of strategy versus the United Health of, let's just deny everyone's claims and try and make profits that way. So again, Oscar Health, keep it on your radar. And then, of course, we talked about NUSI. Nusi, the first name that I had mentioned, a really great way to hedge your portfolio during times of volatility. Now let's talk about, because I'm here for another 15 minutes, some really fun grandma names for all y'all listening.
Oh, I'm excited. Let's go.
Yeah, dude. First one here, and this has been in my portfolio, I kid you not, for like 18 months.
Should we name it the Bernie and Ruth playbook?
Let's call it. Let's call it right now. That's it. Lock it in. So this first name here is Union Pacific Corporation. UNP is their ticker. And they're a leading railroad operator in the United States. The company connects 23 states in the western two-thirds of the country by rail, serving major West Coast and Gulf Coast ports. It connects with Canada's rail systems and is the only railroad serving all 6 major Mexico gateways. They've got 10,000 customers, which means they have a very diversified business across agriculture, automotive transportation, chemical, coal, industrial products, intermodal, everything in between. And these specific segments allow this company to generate revenue through the transportation industry across a wide array of goods all across North America. So over the last 5 years, their annual revenue has grown from about 19 billion to 25 billion in 2024. Earnings has grown about 50%, from $8 per share up to $13 per share. Looking ahead, Wall Street is estimating 10% earnings growth in 25 as the revenue grows to about 24.5 billion. So if you want a boring, uncorrelated business away from AI, flying cars, humanoid robots, and everything else, I think a railroad company that's going to be and has been paying a dividend for 36 freaking years and is forecasted to grow
That's
earnings
solid.
by double digits every year through the end of the decade is what you're looking for. So Union Pacific Corp, really cool company here that I've got in my portfolio, and they just blew out their earnings. I think the stock was up 7 or 8% on the day after their earnings came in stronger than expected. So lots of excitement with Union Pacific Corp if you're looking for something completely uncorrelated to this AI madness we're seeing right now.
I love it. That's an interesting name. Definitely something I'm gonna keep on watch. It's doing great too right now. Just looking at the chart right at these highs. So would love to see that momentum continuing.
Yeah, absolutely, man. And so the next one here, now I guess you could argue that this might be correlated a little bit to artificial intelligence and maybe some but more from the data center perspective. And but I think they're so diversified away from data centers and AI that it's just kind of like gravy on their, on their steak here, a little bit of icing on their
Yeah.
cake for them. And that company is Martin Marietta Materials. MLM is the ticker symbol. Now, despite their ticker symbol actually being MLM, which might remind you of multi-level marketing schemes, this is anything but a market or a multi-level marketing scheme. So, Martin Marietta Materials is a leading supplier of gravel, crushed stone, and different types of, sands and soils and things like that, right? Sounds super boring. Why should I care about this? These materials are essential components for construction projects, including infrastructure development, aka Stargate. Y'all heard of that project before? Commercial buildings and residential housing. Their stock price is up 410% over the last 10 years and up over 500% during the same period of time when you include reinvesting their dividend that they pay. Now, the company's primary revenue streams come from its building materials business, which encompasses the production and sale of aggregates, this ready mixed concrete, asphalt, things that go into building things, right? Now, 2024 for them, unfortunately, was a little rough year. It was plagued by weather headwinds. We saw different hurricanes, Florida, Texas, everything. So it caused the company to leave a couple $100 million on the table, but they've got a track record of impressive growth, and I believe Wall Street right now is right in their forecasts of 18% earnings growth in 25, 17% earnings growth in 26, and 14% earnings growth in 27. So that's pretty impressive, if you ask me. I think the stock is going to see $1,000 a share sooner than we think, perhaps by the end of the decade, maybe sooner, especially, again, if the Stargate project is going to take off in the U.S. like people assume it will. I mean, I would imagine by the end of this 4-year Stargate sort of trajectory for all these, $500 billion of reinvestment, that this company would see $1,000 per share stock price. They're going to see a ton of new contracts as it relates to building these data centers, building this infrastructure, building the physical places that not just data centers, maybe the power plants, we all need asphalt. We all need gravel, crushed stone, sands, things of that nature. They've done a great job of delivering earnings growth to their shareholders. So give me MLM, slapping the table on it. I'm excited.
They got to do something with that ticker. That's wild.
I agree. They got to do something about the ticker. The ticker is the ticker's not good, but
you got to invest in
underlying
MLM. That's like
business
all
is,
I hear.
interesting.
That's funny.
Good stuff.
But yeah, I just think it just really highlights, guys, that you don't need to. And our friend Jaguar talks about this all the time. He's way better at this than I am. Jaguar Analytics, I believe, is his name. Um, but it just highlights and goes to show that like you don't have to always be investing into the most sexy new thing to make money in the markets.
No, you don't. We think we do, right? Because everybody and their mother, they're showing these giant gains trading Nvidia, trading AI stuff, right? And you get that FOMO. You think that I have to be there if I want to make any money. When that's just not the case, right? There's plenty of money to be made in other sectors as well, and lots of it, right? It's not just like it's a tiny opportunity. There's some big opportunities outside of AI and all this. So I think you're highlighting that perfectly. I think that's great because people need to know that, right? And same thing as like everybody comes into like day trading and thinks you can only make money on like options, right? When that's just not true. There's a futures market, there's crypto, there's long-term investing, there's short-term trading, right? There's all these different types of styles. So no, I think that's great highlighting that and just showing the differences there.
100%, man. At the end of the day, it's so fun and really smart to have allocation to the Snowflakes, Cloudflares, MongoDBs, and DigitalOceans of the world. I certainly have that allocation in my portfolio. As you guys know, I've got, I'm building a $2 million dividend growth portfolio from scratch, which right now we're around, I think, the $450,000-$500,000 mark. And right, we've been building this completely public for the last two plus years now. But I guess what I'm trying to get at is like, I have these cool names, but I also have the Union Pacifics of the world. I also have the Verizons of the world, and those other Krogers, things like that, where it's okay to have really, really high flyers, and I think everyone should have that, but it's also okay to have the ones that are the long-standing, tried and true, dividend-paying names like Union Pacific that's been paying a dividend for 36 years.
Well, because two things change, right? Times change, and what's hot now might not be hot in 10, 20 years. It's just the way it is, right?
Well,
And obviously, I'm pretty optimistic about like technology and AI and stuff like that, but it doesn't mean you
Totally.
shouldn't be exposed to other sectors as well, even if they're a little quieter or more boring, right? Because that might be what's hot in 10 years from now, right? So, no, I love the thoughts. Shy, yeah, did you have
no, I
something
was
to say?
gonna say it's a different flavor, but I kind of do somewhat of an orchestration in my portfolio management in that realm as well. Where like, I know Amazon might be a growth stock to a lot of folks, but for me, it's kind of like one of those anchors where like things go drastically wrong. Like I think Amazon has a very high floor in their stock. Like pounds here can go down 60% on, I don't know, something that's not thesis breaking, but it's a premium valuation. There's volatility in that name. I don't think Amazon will ever go down 60 or 70%. I really don't. They have such a high floor to that name. So like, I think having anchored stocks in a portfolio in a similar fashion that we were talking about right now is a great strategy. You can't just be all risk on. Like I think everyone can agree. Like I'm just so on the right side of like risk on and like growth. Like I'm all growth stocks and risk appetite's there for me. But like I think when things go bad, you need to have some stocks in your portfolio that treat like an anchor. So like you're protected in some way. You never know when if this. I think this AI bubble commentary is absolute BS. Let's just say it's not. It really it
Oh,
where it's pull forward demand is so elevated that it doesn't really come to play in 5 7 years. This AI stocks are going to tank because it's run up a ton in the past 2 years. Again, less than 1% chance, in my opinion, for that happening. But that less than 1% chance, if it does happen, I'm going to experience a 2022 again. And I don't think anyone here wants to experience a 2022 where my chest wasn't as hairy as it is right now. I grew a lot of hair on that chest because of what occurred during that bubble bursting.
yeah.
Don't be like me. Have that clear. Don't have hair on your chest. Have a good strategy to not be so gun ho about specific niches within growth tech.
I'm right there
Yeah.
with you, man. I love that breakdown. I'm curious for you guys, what do you think is going to happen to Nvidia, Broadcom, and some of these hardware names in 2025? I mean, it's obviously in the red right now, talking about Nvidia here. Broadcom, I would assume it's probably trading alongside uh, Nvidia. So actually, Broadcom's a little bit in the green today. But I'm curious, what are y'all's perspective on what might happen with these names over the coming? And obviously, no one can predict the future. Don't mean to put you guys in a spot to
Oh
do
no,
that, but I'm
Oh
just
no, you're
curious,
good. Well, I'll start with mine real quick because I Trump-led presidency obviously just brings the volatility, right? That's what we were expecting. That's what we've pretty much seen for the start of the year, and I'm looking for that to continue. So I think things are positive for the year. I do think we close green on Nvidia. I do think we close green on SPY, but I think it's like a slight green, to be honest. I think we're gonna fight our way through 2025 a bit with just volatility, right? Crazy moves back and forth, right? We might end up doing well, but I think it's going to be a bit of a fight to get there in terms of like volatility and back and forth. Shy, what's your kind of? I know you got kind of a detailed explanation on what you're kind of thinking for the year, but like, what's your thoughts on that too? I know there's some similarities.
So I think when there's any kind of noise on an industry that's kind of been clean for the past couple of years, it's going to cause some FUD, some oversold nature. I think the disruption, like there's going to be, I think there's specific semiconductor names that are safe from disruption that are being priced along with the whole bucket being sold off right now. Like Nvidia, I think their CUDA platform, the adoption of their CUDA in generative AI is going to, their workloads and AI workloads in CUDA is going to outweigh the risk of commoditization in GPU hardware. I really do think that. And I think that the software ecosystem they built around their premium hardware protected themselves from this DeepSeek playbook reveal. I really do think that they're somewhat safe and have a high floor. ASML, TSM, I think you're going to need those machinery still, even if there's going to be a decline in high complexity chip production. I do think that tied to the open source models that DeepSeek provided, I do think that the growth in inference and proprietary solutions will outweigh that risk, as called out. Broadcom, Marvell, and Astera Labs, I think those names are protected due to the demand in inference workloads is going to surpass the decline in any AI training demand. So I think they're safe, but like those names got destroyed yesterday. The names that I would be worried about, guys, is the equipment manufacturing companies, like the names like the Amets, the KLAX, LRCX, like those names are they have a costly equipment, and as hyperscalers or the democratization of AI tools move towards simpler proprietary chips, that the design challenges won't be as drastic as they are right now. I think a lot of these names are going to be in somewhat trouble. I also think a lot of the analog focused names like the Texas Instruments, the ADIs, they're going to miss out on this booming digital AI market, or the high demand AI connectivity markets. You don't need them as much if this is a trend we're going towards. So I do think that there is going to be somewhat of like, you have to be picky and choosing on like where you want your exposure, and like be willing to like gut check your thesis. Like theses need to be gut checked now in this post AI world. Things are moving so quickly. Nobody on the street, even Dan Ives, Tom Lee, like nobody really knows what AI is going to be like. They have a thesis, they have an idea. I'm a perma AI bull along with the Tom Lees and the Dan Ives, but at the end of the day, like you have to be flexible with new information. This DeepSeek news flow or the playbook that I revealed over the weekend, that's new information. They essentially showed there's another pathway towards getting to the destination that everyone wants to get to. It's not just, oh, Nvidia has to solve, we're just going to rely on Nvidia, whatever pricing power they have, it's the best option we have. That's not the case anymore. There's an alternative pathway now. There's two ways to get there. That's new information. Training demand is going to get affected by it. Nobody knows the extent of that, but that's an example of why you need to be flexible and not hard-headed on, oh, this is my thesis 2 years ago and this semiconductor name, it's going to be like that for the next decade. We just got new information that showed that there's two pathways now. So you have to be flexible and adjust. But curious what your thought is on, I just went on another tangent, but
No, I love
curious what your
this
thoughts
back and
on what I
forth from
said.
you guys. You're good.
Yeah, I mean, I think at the end of the day, Nvidia, Broadcom, especially Nvidia, right? But like, there are very specific companies out there that have built such powerful moats around not just their chips, but to your point, these sandboxes that if it's a humanoid robot or something else can use to learn more. I'm not going to pretend that I'm an expert. Obviously, Shy over here just gave us the sauce, but I largely agree with everything you said there. I think to your point, the applied materials, the KLAX and things like that, they probably will see a slowdown. I mean, that makes a lot of sense to me. I think something that Jeff Bezos said in an interview a couple years ago really rings true today, which is during times of uncertainty and when everyone's trying to predict the future and predict what's going to happen and, be capital allocators, sometimes the best bets to make are the bets that things that don't change, things that will never change, right? And the example he gave was, I'm making a bet that people are always going to want their Amazon package delivered to them faster and faster and faster.
Yeah.
So we're reinvesting in, delivery infrastructure. And, Shai, I'm sure you remember, but if it was 24, they came out and said that they got tens of these billions of packages and they cut, delivery time by like 50%, which allowed them to be more efficient and cut costs and, more profits to the bottom line. So, during a time of uncertainty, during a time of, a lot of people are trying to guess what the future might look like. I'm a big believer that having allocation to some of these high flyers is a great idea, but it's also a wonderful idea to bet on things that won't change, aka building materials and gravel and asphalt, as well as a train and a train company that's going to be moving agriculture around the United States. I think those things are really important, and having that mindset that it's okay to not always know what the future holds gives you a little bit of perspective as to, well, what do I know? Well, I know that I'm always going to be swiping my American Express or my Visa. I know I'm always going to be shopping at Target and Kroger. I know, things of that nature. So
Yeah, I get you.
I'll leave you with that as my closing remarks.
No, I love it. I think that's a great way to think about it. It's kind of similar to as well as like be investing in what you know, right? Like if you're using something over and over, maybe you should own a few shares of it, right? If it's a part of your daily life as well. So no, great stuff. I love the highlight on just like it's okay to talk about a little bit more boring names. It's okay to be exposed to these because
we need that balance on the show.
yeah,
Like,
you need that balance. It's been
way
AI
too
Nvidia for a year straight. It's time to talk about something else. So no, happy you brought that up, Austin. I appreciate you coming on the show as always. Audience appreciates it as well. And I think that's gonna wrap it up for the day. But Shy, if you have any last words, feel free. I think we're good to wrap it up for the crew.
Look what's happening back-to-back days, guys. Software's taking off right now. Snowflake's every software name's up 4% right now. Like this,
I know, man. I'm looking at. I see Cloudflare's up. I see obviously CrowdStrike, Datadog, but what was this other name? GitLab, dude. GitLab's looking pretty cool.
Source code management is gonna be a necessity in the agentic AI world. So GitLab will catch a bit. I just think they're gonna get acquired. So like I'm not
really.
I don't love invest. Yeah, they're gonna get acquired for sure by Google. It's like the worst kept secret I think on the street. But they got a new CEO, so maybe those plans got pushed back, or maybe AI agents saved them from that inevitability.
I am surprised though to see Berkshire Hathaway down 1% today. They're in the red a little bit,
taking a little hit. Maybe catching up. Nah, it doesn't look like catch up. That's not too bad of a day. I feel like so far. We'll see how she closes though.
Yeah, we certainly will.
A lot of momentum yesterday. All right, boys. Well, great morning. We'll see you on the next one, Austin. Appreciate you again. For the crew, enjoy the day. Trade safe. We'll see you guys bright and early in the morning for another episode. Peace out.
Cheers, boys. See you later.
See you guys.
Goody.